Hello, welcome back. It's been like 10 minutes since we got the October inflation report, and I'm making a video just to let you know, breaking news pretty much. The Dow is actually up more than 800 points after October inflationary report is lighter than expected, as you'll see here, inflation report that is. And you will see that the Dow Jones has jumped 844 points at least at some point. It's actually more right now. I mean, if you take a look at the futures, the stock market futures, you'll see here 2.37 for the Dow Jones, but take a look at the S&P 3.21 and Nasdaq 4.32, ripping right now with a small cap 3.61, the Russell over here. Now let's take a little bit of a closer look at what happened again with this report. You will see that we got a rise, inflationary rise that is, of just 0.4% for the month and 7.7% from a year ago. That is the big thing about this one. Even though it is an increase, it is less than expected and quite significantly so. And the thing is, it's the lowest annual increase since January. We have been getting more and more since January, and so when you are getting some taming increases here, it may be a sign that we're potentially looking at a downwards trajectory for inflation eventually. It will happen eventually as long as no more money is printed, basically, for the most part. And also people are allowed to work, like no more lockdowns. Economists were expecting increases of 0.6% and 7.9% from a year ago, as you'll see here. And excluding volatile food and energy costs, the consumer price index, this is the CPI over here, increased 0.3% for the month and 6.3% on an annual basis, also less than what was expected here. Now, of course, we're going to see whether the Fed will take this into account and kind of slow down their aggressive hikes, whether we're going to be looking at maybe at a 75 basis point next time or a 50 basis point next time. We'll see what's the case. Now, the Treasury yields plunged after the CPI report as expected, with the 10-year Treasury yield falling more than 18 basis points to almost 4% over here, falling below, though, the key 4% level. Interesting to see. Of course, we're going to be seeing whether the market will follow through, but more than likely we're going to be having a pretty significant up day in the markets. And this is why it's always important to stay invested in the markets, because you just don't know when the good days will be. And in these good days in the markets, you can get a very high return over here. So if you are not invested and you're kind of timing it, you may have lost these kinds of days. So as the stock market is going down and giving you better prices, at some point you do definitely have to get in. Now, of course, you never know what's going to be happening in the future, but what you do know is that a lot of the profit that the stock market makes over the year is just a few days, and this is something that many people don't really understand. Many days go sideways. There's like a 1% increase, minus 1% downfall, and then there are some days where you are getting like 3% increases and 4% increases or more in some situations. So it always pays to stay invested, but as of course you want to be buying your stocks and your pretty much investing instruments at as good prices as possible. This is why it also pays to potentially dollar cost average, or in some situations even wait for your stock to fall at a price that makes sense for you, of course. Okay, so what you'll see here, peak inflation in Europe is almost within reach, is what the European Central Bank member says. Another very important thing, Eurozone headline inflation hit a new historic high of 10.7% last month. But one ECB member believes that price growth could be about to come down, and this is what we are kind of seeing right now for Europe as well. It looks like inflation is kind of going down as well in Europe. And the other thing that you will see here is what we talked about a little bit earlier. Consumer prices rose 0.4% in October, which is less than expected as inflation eases. And of course, this is key. We really like to hear that. Hopefully, this will follow through, and we're gonna be getting some better outcome for the markets and the economy in the upcoming months. As you can kind of see the increase here and how it's sloping upwards and then kind of starting to go down a little bit over here. Of course, there is a lot of work to be done and probably some more pain to follow through. But if the inflation actually goes down, the stock market could definitely surge. And if you are looking at even higher declines in terms of the inflation reports in the upcoming months, you're going to be definitely looking at surging prices for the stock market. This will happen at some point. The only thing that we don't know is when. Like, will it take a year? Will it take a few months? That we don't know about. This is, again, why it always pays to be invested for the long run and kind of, wait to see what's going to be happening in the upcoming years. Now that's what I wanted to talk about. Of course, as I'm gonna be getting some more information, if more information comes through, or if we have things that we want to be discussing about all sorts of companies right now, I will be making separate videos. So stay tuned. Remember to leave a like and subscribe, and I'll see you soon. Bye bye.